Yeah. Welcome to the show. Yo. Damn, that music is jumping, baby.
Banging.
That is banging music. I mean, good Lord on the handbasket. Welcome to the big show.
That's awkward.
Is that your phone, Paul?
That's my phone.
Welcome to the big show. It's Tuesday. What time is it? 2 p.m. Eastern. We're here in Akron, Ohio. The three of us, as always. Paul, I got this new Rogue shirt on. A gift from my family. We welcome, Albert from Australia. We welcome you all in. As always, folks, we love hearing where you're at in the world. If this is your first stream with us, welcome. This is how it's going to go down. We will talk. We will BS. We will laugh. We will poke fun at each other.
You might cry.
That's happened. We'll jib-jab about the economy, about finances, about stocks. We have a charity today. If you would like to see a particular stock analyzed right here, right now with Paul, you'll have to pay $50 in the super chat, and all charity money, all donations go to the International Justice Mission today. This is Tim's organization, and they help poor people all over the world get out of what? I can't say poor people, underprivileged people, poor people. They help poor people, Paul.
He's like a Republican now, Seth.
All over the world get out of sticky situations, including a bunch of terrible things, that slavery, sex trafficking, all the terrible stuff that's going on out there. That is our charity today, and we'll put up a website later on going on. So if you're moving forward, if you'd like someone's in Columbus. Vienna, Austria. Oh my gosh, look at this. Yes, I see one there. Everyone's so Germany, Guten Tag in Germany. Great, guys. Yes, smooth. Dwayne, you're right. That was a smooth transition. Hello from Norway. I love you guys, Sweden. That is the charity to the International Justice Mission. If you want to hit $50 in super chat, and if you're overseas, then do the math, because I'll do it for you if you don't give the $50. And
go to Google, do a currency converter.
That's very smart of you, Paul.
And then there you go. Like $50 US to your currency, it'll tell you exactly how much. Go do it.
Scotland, and I love Niagara Falls, Croatia, Romania, Jersey, Hungary, and Romania. Wow, look at that. And North Korea, someone from that. I highly doubt that.
USA, you suck.
Paul, give us an update on everything money, actually.
Susie's so nice.
Yeah, she is.
Everything money, we just hit 98,000 subscribers yesterday. We will be hitting 100,000 subscribers before Thanksgiving. This is very exciting, guys. The software, we just did a new redesign. So if you've been on the software, it's a new redesign for the desktop. Why do you look at it like that?
You said yes. Yep.
Things are going great, guys. We keep planning more and more for the future. Talk about what the things that we're doing. I don't know what else there is. The software keeps getting better. We keep adding more. We keep spending more on the software. Cool things coming up. Tim's working on some awesome stuff. Tim now knows that he just needs to... Tim's doing great. He's just handling things. He's working with the devs and making the software better and better and better.
We have more tools in the software to provide you with. I look at the retirement calculator all the time to see where I'm headed with my money and my savings. I show this to a lot of people in the world, Paul, and they really, really love, look at this. And here comes some charities coming in. Thank you, Llewellyn. Practical Medicine, Paul, said, will you eventually do reviews on financial education, Popular Investor, Prosperitrade?
And then he wants us to do Inmode, which we've done before, but a long time ago. So let's do it.
Folks, I'll say this again. A lot of you have asked for our opinion and take on some other YouTubers. In essence, the data that is out there is showing that we will outgrow all of these channels in the very near future. So, for example, someone like Jeremy from Financial Education pulled up a video of ours about Tattooed Chef and totally blasting us, and all his followers came over to our channel and knocked us down a bit, which is fine and dandy for now. And he's at like 600,000 subscribers. We will beat him to 1 million, and we'll be giving him double middle fingers as we pass him in our Teslas. And so we're growing at a much quicker pace. Everyone says that we're clout chasing them. They're actually clout chasing us. So we're not. Paul has basically described to me in private, which is now public, that they're not really our competition anymore. They're somewhat beneath us.
I literally don't think we have competition, and I don't mean it to be snobby. Like Jimmy from Learn to Invest, I think he's phenomenal. But even what we're trying to do versus what Jimmy's trying to do, we're trying to advise him on how to get bigger and more revenue. And I'm not saying it in disrespect to Jimmy. Jimmy, we love Jimmy. We were in a group chat with him. But I look at it going, I don't feel like we have competition because what we're trying to build up here.
And the revenue leads to a better app for you. So, while other channels are promising to join their secret Discord to get all their insider picks, even Dave Ramsey, I got all the mutual funds, Paul, that they outperform the market. Oh, there's no secret.
But he's been doing it for 30 years.
Yes, of course, Paul.
I mean, Warren Buffett's only been doing it for 70 years. So if your logic works for 30 years, then we should listen to Warren Buffett. So let's do Inmode.
So again, folks, that's our take on that. But I appreciate your thought. I do like this Prosper Trade guy, Mo. We did a reaction for our
he was good
for the community.
He's not big enough. He should be a little bit bigger.
He should be bigger. Paul, we'll show him to you later. But anyway, let's get after Inmode, Paul. I don't know anything. I can't remember about this company. What does it do again? Is this chips or whatever?
No,
I don't remember.
Surgical, aesthetic, and medical treatment solutions in the U.S. Look at the stock chart.
Oh, look at that. What
175 down to now it's 85. So it fell in half in the last month, right? Last month, yeah, it's fallen in half. Okay, guys.
Go ahead, Paul.
$7 billion company. Recent PE 54, no 5-year PE, probably because they don't have profit in the last 5 years. No 5-year free cash flow, no 5-year return on invested capital. Great start for Inmode. Income statement. Well, that's why. Only 4 years of data. 4 quarters. Revenue growth, 46 million to 287. That's awesome.
Yes.
They had profit every single year. That's pretty good. Shares out. Ooh, look at that shares outstanding, Seth. Guys, could this be the reason why the stock fell in half?
Oh boy.
Could this be the reason why the stock fell in half?
Well, they halved everyone's stake.
Huh?
They halved everyone's stake.
But I thought when you increase your shares outstanding, it increases the market cap.
Let me take a look at the market cap.
Did they do a stock split? Our data is just wrong?
Yeah, they did a split on October 1st.
Oh, well, then our data is just wrong.
Just recently, huh?
Yeah.
Okay.
Oh, so they split down from 150 down
2 to 1.
2 to 1. I see. So they are in half. Okay, there you go.
Okay.
Paul.
So let's report this. Because I was going to say, I thought I remember I owned this stock at one point.
Inmode. So it doesn't really. This is misleading the ticker price here, right? Mo,
Yeah.
Wouldn't you say?
Yeah.
So the ticker price was, the high was 175. Divide that by 2, that's 87.
$85 today.
Yeah, it's
So it's 85 bucks today.
right
So it's
now.
okay. Got it.
Yep.
Cash flow statement. We don't have an average of the last 5 years, but they have positive free cash flow. Let's see, 140 times. So here's the deal, guys. The company's so young with such big growth, how do you value this business? How do you do that? It's currently selling for 30 times revenue, 24 times revenue. What companies sell for 24 times revenue? It's just really, really high. I'm not saying it's like, it just seems like the numbers have to catch up a lot. Their free cash flow last year was 143 million. So their current price of free cash flow is, what is that? 50 to 1? Does that mean it's going to be good? I don't know. If it grows at 30% a year, it could be good. Net income on, whoa, that net income is really high on that revenue. Whoa, 158. They make, oh my God, that's a lot of money. They have a very big margin, guys. So let's do a stock analyzer tool real quick. And I'm just going to do this to say, let's assume this revenue growth for a long time. Let's assume 15, 20, and 20% revenue growth. Share change, let's go with 0, just to be safe. Profit margin, 30 and 40. Free cash flow, same thing. PE, let's go 14 and 18. 14 and 18, 12.5 and 12.5. All right, so it's just telling me this is guys, I have 15 and 20% revenue growth for 7 years. Let's go to 10 years and see how it looks if they do the same numbers. It's getting closer, but the bottom line is it just seems like an expensive stock. Now, I don't know what the revenue growth will be. If their revenue growth is going to be 30 to 40% a year for 10 years, look at that, all day long. All day long, you're there. So remember, that's what's great about the stock analyzer tool. It's about seeing, okay, is this realistic and expected? Maybe it is. Maybe they can go at 40% a year for 10 years. 1.4 to the 10th. What's the revenue now? 250 million? It would take them to 7.2 billion. There's a lot of companies with $7.2 billion in revenue. It might happen. They probably have to issue some more shares maybe at some point. I don't know, but their margins are very healthy.
That is the nice thing about stock analyzers. Some dummies will look at this and say, "Oh, Paul, scroll down. Paul thinks that this is a blah 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 company, the lowest price." That's not it at all.
Yeah.
You can put in your own assumptions. Maybe you've read the 10K. Maybe you follow this company for years and you know more than us. That's probably likely in terms of this particular company. But you can make assumptions, and it can help you pick a price. It does not mean what we think the price should be. That's what you need to buy to make a return, much like buying a home. The more you pay, the less you'll make on the back end. And so we have to keep that in mind, which other folks have trouble with, Paul. So final take, Mo, are people trading Inmode over there?
I don't necessarily recognize this ticker, but you know what? It's
Remember,
close.
I bought this one last year and made like a quick 15% in a month.
Really? I don't remember this one.
Yeah, I did on air. I bought shares on air.
Oh, that was the one.
Yeah, this is the one.
Okay. So
Why'd you do that? I don't remember.
I remember liking it, going, okay, let's do this.
That's when we were set up. I was in that corner. That was
okay.
that long ago. So all I look at right now is this climb that happened, and I just look at that little blip in volume, and it's coming right back down. So to me, because it's challenging all-time highs, you're starting to see this stochastic start to roll down towards the sweet spot in the negative direction. I just think eventually this thing's going to fail and come right back down here, probably to the mid-50s. That's what I'm thinking right now. But that's so funny. I completely forgot about that stock.
Okay. So hopefully that helped. NXST. Is that the next one, Seffi?
Yes.
Nexstar Media Group. Largest television station owner operating in the United States, 197 stations and 115 markets.
Whoa.
So stations, I'm apprehensive about stations in the long run. I think the market's telling the same thing here. Last year's PE only 6.7, 5-year PE of 13.6 on a $6.5 billion company. I mean, they have growing, let's see, free cash flow 522. Last year was $1 billion almost. Return on invested capital is low. Okay. A dividend they can easily afford. Easily. Great margins here. So listen, guys, what do we think about local news?
Who cares?
Well, that's what I'm wondering. Is our generation the generation that starts I don't watch any local news. Do you, Tim?
The most local news you're going to get. Yeah, it's going to be clips from an app or little news stories, but nobody's going to sit there and flip on the channel 5 to see the weather.
Maybe they will.
I mean, Paul, on Saturday nights, Paul will watch the news and then Cash Explosion.
Yeah.
And
I usually do that in my robe with my cup of nice warm chamomile tea.
Cash Explosion is the worst show ever.
Folks, if you don't know, here in Akron, Ohio, they do this lottery show on Saturday nights. The old folks love it, right after the news. And it's like a Jeopardy-based show where old people just pick random numbers on a board and win a certain amount of money, and of course they lose it all. But Cash Explosion. Let's keep going with the Nexstar Group.
Okay, so revenue. 1.75 to 4.74. Big revenue growth. Something tells me there's going to be acquisitions on this. Look at this. 333 million 10 years ago, now there's got to be a lot of acquisitions here. We want to look at how's the revenue per station going per year. This business will take a lot more research than just what we're seeing here. Because if this is all through acquisitions, but every station's revenue is decreasing, that's a problem. Net income growth, 95 million to 955 million. Check mark there. Shares outstanding, decreasing shares outstanding, look at that. But look at they issued a lot of shares right here. Probably because they made some big acquisition. Right?
Wow.
Yeah.
Okay. Now, the 5-year average free cash flow, 500 million, we want their long-term debt to be under that. TV stations tend to have a lot of debt. So 522 times 5 is $2.61 billion. Let's go to the bottom. 10 billion. There you go. That's an X. TV stations have a lot of debt. They use a lot of debt to buy them, and it's tough.
Pillar number 7 is free cash flow growth over the past 5 years.
All right, 241 and 964. Now look at this, Uncle Seth. Look at this acquisition line. All right, 300 million, 4 billion.
Oh my God.
2.5 billion, 557 million. So big acquisitions happening here.
They just acquire to try to grow. That's what all TV companies do.
Yeah, they're trying to consolidate all together. Take the 522, multiply it by 20. You got a $10.4 billion market cap.
Yeah, the actual market cap is 6.4, Paul.
Yeah, I mean, they're selling for a low multiple. 8 pillars, okay.
This donation was by Ed. We appreciate it, Ed. All donations go to the International Justice Mission today. Thank you.
Ed, okay. So I want to go do something here. I'm going to go to their annual reports and see if I can see what the 10K says about.
Oh, a little due diligence, Paul.
Well, because I wonder how many acquisitions they've had.
Yeah, it seems like they're merging and.
What's the name of this company? Nexstar Media.
197 stations in 115 markets.
Significant transactions in recent events. Look at all these transactions. Man. So guys, I would say this. We don't have the time to do that here. How many in Ohio? Do we see any in Ohio? Cleveland, WJW, WNBC, Columbus, oh, G-Rap City, love G-Rap, Dayton, oh my gosh.
They were saying this was a 8-pillar stock 5 months ago, Dwayne was saying.
Wow, was it really? How's the stock done? I didn't even see this
William
chart.
says, I'm now selling puts because of this channel. Thanks a lot. Thanks a lot. Well,
Oh, you're welcome.
That's great to hear. Great to hear.
Okay, so the thing I would do more due diligence on, guys, is how are each individual station doing, and what's the future of TV stations? I don't know. It's just hard because the internet's such an important factor. Now, I will say I see on Facebook and Instagram local TV stations becoming more active and all that stuff, but who knows? I'm not an expert in that TV area. I'd be apprehensive, of course, but maybe because of these multiples, it's okay. Like, look at this. Let's go to the stock analyzer tool. I'll just do this live. No, Mo, why don't you do it?
Go ahead, Mo. Are people trading this?
So first I want to just pull up the daily chart just so we can look at these, and I should probably erase that, shouldn't I? So if you look at this, look at how for the past, since April, it's just been stuck right on top of those moving averages and it hasn't been able to move off of them. If you really look back, you could see a very slow decline in volume that's coming in. Again, let's just look over here. Same thing. Look how hard that is just consolidating in that simple range. So if you want to swing trade it on the other chart, just going up and down, but for a long-term play on this thing, I don't think that it's the best idea. Even from a value side, I don't think it's the best idea. Their average volume is 223,000 shares traded per day.
Wow.
It's pretty low.
So guys, look at my revenue growth number, everything. I assume they just stopped buying TV stations. So this revenue growth is based on stop buying TV stations. I don't want to give them credit for stuff they haven't done yet. -2% and
That's
2%.
weird.
Share change, profit margin, free cash flow margin. Look at the PE and look at these multiples I put in, 6 and 10, 12.5% return. Analyze. I mean, guys, it's a deal if you believe they can grow revenue at 2% a year and buy back 2% of their shares. It's a deal. And it was a deal very, very recently, too, on the low end of the margin. Low end of the deal. Yeah. As recently as November, December, it was a buy at these levels. Just do your homework on this, on what their plan is and what the future of TV stations is. So JMK, he asked, why do we care where revenue growth comes from? I'm going to sit there, because usually with revenue growth, if they're doing it through acquisitions, they are taking on more debt or issuing more shares. I want to sit there and say, let's say they stop today on this current asset. Would it be worth it? And if they make acquisitions using the same metrics, it'll get better. That's the reason I look at it that way. Because you don't want to get revenue growth just because they're acquiring if all the other assets are just decreasing in revenue every single year. You want to make sure that their current assets are, you're paying for what it is today. And if they can figure out a way to make more money in the future with extra money, that to me is the conservative way to look at it. I wouldn't give them credit, because look at this. Their revenue growth, it has been in the last 10 years, 34% a year. Okay, let's say they keep doing that. It says you should buy the company, but in that time period, how many shares are they going to issue? They're going to dilute the heck out of you. So then you have to sit there and go, okay, well, if they're going to issue shares, I got to go to, 8 and 12%. Maybe so. Okay, maybe that works. If they can keep doing 20 to 30% revenue growth by acquiring and diluting people doing that, that's very possible. As long as you account for it in the share change, I'm cool with it. But they're going to take on a lot of debt. This company has 20 times debt to their free cash flow. That's a pretty high number to me. Pretty high number. Do you see that, Seth?
Yeah, look at that.
Oh, I'm sorry, 12.28. Oh, no, I'm sorry, 19.2. There you go. 20 times their 5-year free cash flow number. That's a lot.
We'll take a small break here. We did videos today on Atomic Habits by James Clear, the author. We talked about how small changes in your life can lead to big ones. We looked at BTI, British Tobacco, Oracle, Disney, Snap-on. We did a video on dollar cost averaging, what it means to you and how you should be implementing it moving forward. We did a video on Macy's. As always, everyone in our community. You're getting those daily videos now. We are very committed to this, bringing you mindset videos, individual stocks. Paul's recording like crazy. I recorded 3 last night myself, Paul, and Mo's been after it. So that daily content is coming to our community members. And if you want to join our community, you can have the software behind Paul that he's using right now. Click the link below, everythingmoney.com. You can join up for the monthly fee, and we don't double charge you like Patreon. We don't charge you taxes like Patreon. So you can go to Everything Money, have the software, have the retirement calculator, and you can trade with Mo in the Bid and Ask Nation if you're so inclined, Paul. Let's keep going. I would say, Paul, should we keep going with the next stock here?
Sure. What's the next one?
Okay.
Do we have enough now?
No, we're only at 4, Paul. Deep Lying Playmakers looking for...
Well, Adam Nash just added one. Is that the 4th one?
Yep.
Okay.
We'd like to look at Molson Coors, ticker symbol TAP, Molson Coors.
Oh, tap, that's adorable.
I know you like to sit back
Whoa.
in your rocking chair and tap a Molson, old Molson.
Yeah.
Look at that decline since 18.
Oh, wow, look at that.
Oh, holy cow.
Look at that. So this price topped out in Mo 2017, 2016, $110.
What's that?
2016, I'm sorry.
I was going to say, I was like, what are you talking
No,
about?
I was looking at October 18th, 2016.
So guys, let me just make note. If I told you in 2016 the stock was going to go from 120 down to $44 in 5 years in the biggest bull market ever, it's not going to happen.
You're delusional, Paul. You're stupid. You're missing out.
All
You're
right,
losing it. Go ahead,
$10 billion market cap, 5-year PE of 13. Last year was a bad year, so they have a check mark on the 5-year PE. Barely pays any dividends. 5-year return on invested capital, 5.6%. So we have 2 X's. We have 1 check and 1 X to start. Free cash flow, 5-year average is 1.3 billion, but last year was only 940. So was it COVID related? I don't know. Let's continue on. Income statement. 10.95 to 11.98, check mark there. Net income, 1.8 down to a loss of 554, X there. Shares outstanding, 215 to 217. So they're issuing slightly more, so another X there. Their 5-year free cash flow is 1.3 billion. So we multiplied this by 5 for how much debt we want. And what does that equal? $6.5 billion. So we want their total long-term liabilities less than $6.5 billion. We go to the balance sheet, scroll to the bottom, 10.39. Ouch, that's an X. Cash flow statement. Let's see here. 1.09 down to 942. That's an X. Average of 1.3 times 20 is $26 billion. And the market cap was 10?
9.7, yeah.
Okay, so there's a check there. Let's look at the 8 pillars tab. All right, so guys, this may be an example of just a good company that they had positive free cash flow during COVID year. They had negative earnings for 2 years, but positive free cash flow. 7.5 times the 5-year free cash flow is what this company's selling for. This is very exciting to me. Very exciting to me. The 2 valuation metrics are low. So this could be an example of a company that's just been hurt by a short-term blip. Let's go to Stock Analyzer tool as Mo talks his mean ass talk.
So this is a dog stock for sure. It has moved down through the sweet spot and it is just coasting right along the bottom. And I know because I looked, it's under 4 major moving averages. So what does it need? It needs a lot of volume. It has earnings next week, I believe. I think it's the 26th. So pay attention to that. Maybe that's going to be what it takes to get this little blip going on. I have no idea what products they have outside of like Coors. But man, they have been certainly beaten down. This is one that you want to throw on a watch list and roll with it. You like this one?
What are you seeing, Paul?
These are my assumptions. Criticize them all you want.
What was that point?
I would hope that they're low.
Look at that.
Yeah.
What do you mean, eh?
I mean, yeah. There's
This
something.
is Molson Coors. This is not some shit company.
Yeah, but the problem is maybe are they?
Well, I went to 2 or 3% revenue.
What's their
growth.
return on invested capital?
5.something%.
They're doing something wrong.
Why is that?
I mean, look, just see how bad that they've done over for a 5-year period now.
Well, Mo, okay, look at 5 years ago. 2016, they had profit of $420 million.
Yeah.
And the stock was triple.
Yeah.
Was it triple?
It was $116.
So triple. So they were a $30 billion company making $500 million. That's 60 times profit. This adds up to me. Now the stock is down because that was an insane valuation.
Yeah.
Do you follow?
Yeah. This to me is one where I want to go and read more about it.
Well, yeah, I think so. But I look at this going, this is Molson Coors. Like,
I mean, they're one of the big dogs out there.
Yeah. I like this one. Thank you very much for whoever requested it.
Really, you like this?
Well, because I look at it going, I know Molson Coors. Who here doesn't know this company?
Yeah, you're very right.
Everybody knows it.
Everybody knows it.
They're going to be around for a very long time.
Look how many brands they have. I mean,
Let's do this,
there
Mo.
are so many brands in here that I mean, they have Miller Lite in here.
Let's go
Foster's,
20-year analysis, Mo. Let's go 20-year analysis.
Blue Moon.
Let's assume.
Oh wow, Mo, those are all the brands. Look at
Yeah.
Hey,
Glosh.
David, put the screen over on him. Look at Mo and all those brands.
I mean, there's so many brands in here that
I love Blue Moon. By the way,
all the
Tim,
Coors.
have you ever if you go out to a bar?
Keystone Light. The Hillbillies love it.
Come on.
Who doesn't drink it now?
Hey, listen, if you're at home,
Peroni.
take half a Blue Moon and half a Coca-Cola. That's an amazing drink, Mo. Half Blue Moon, half Coca-Cola. I'm telling you, don't knock till you try it.
Oh, and then they have the Vizzy. That's the seltzer stuff.
What you doing, Paul?
I mean, I'm looking at it going, okay.
Mo, for our new viewers, are we
Yes.
done? Are we done with Molson, Paul?
Yeah. Mo, can you add this to our list?
Sure. Why don't we look at some options while we're at this? Can you just put the screen on Seth, let him talk, and pull up your account over there?
Okay.
Mo,
Let's talk about it.
about Molson.
Yeah, go ahead.
How many of you drink?
Or tell me whatever you were about to tell me.
I was going to ask you. I see a lot of new fans in
Yeah.
here. Why don't you tell them what they can get in the bid and ask real quick? Because this is the elite tier of trading.
Good
in
question.
Our community. And let's
in
go
bid
for
and
it.
ask, you get, of course, you get all of the software. Then you get all of the training videos from me, Trading 101 series, and it walks you through everything that you need to be successful. You'll get a Trader Mo bot. You get tons of documents to tell you how you're going to be successful. Then you get all of the seminars that I've ever done. Plus, I do about 1 month. I do it like a Saturday morning. I'll do seminars like that. Then we have what's called the Employed Trader series. It's 6 stocks, and every single day I update you on those. I'm going to update you right after the show. And Lockheed Martin is getting very interesting. So it's just more exclusive content. It's one of the top tiers of everything money, and it's great. Go ahead.
I don't mind showing my account on here because there's like no money in there anymore.
Go ahead.
Okay.
So this is Paul's going to pull up.
At least cross out the account number. Yeah. Okay.
Paul's going to pull up
Well, anybody can rewind it now.
what an options chain.
No, it's not on you.
Okay, good.
Okay, good.
Are we ready now?
So here's the option chain, guys.
This is interesting. So you guys have asked for this 1,000 times, so here you go.
So what this means is I'm looking at Molson. It's at $44. On November 19th, I can sell a $40 put for 43 cents. That gets me a 1% return for 32 days of waiting. If the stock ends up below 40, I get assigned the shares at 40 bucks. So if it goes to 35, I bought them for 40. If they stay above 40, I keep my 43 cents anyhow. I keep the 43 cents no matter what. Now, why would you do this? The idea of doing this is I'm going to buy the stock at 40 bucks no matter when it happens the next month. So you don't care if it's on the 30th and 32 days from now on the 19th, if it's below 40. You would have bought it anyhow. If you're not going to do that, do not do this. But this is a good way of earning income while you wait for stock to go where you want it to go. So that's what I would do.
How are they? What's the returns?
Well, 1% in 32 days. That's 12% a year. If you do this over and over and over again, you're going to make 12% return on your money.
Sweet.
Yeah.
I emailed you.
Great. Question from Daniel. Capital expenditures includes the company's expenses on investing, not just maintenance. Do you mean the growth expenditures? If you mean growth capital expenditures, you're right. It's maintenance and growth capital expenditures. And I would not punish anybody for growth capital expenditures. It's kind of like in the apartment business. I always told my staff years ago, before I even learned about this difference, I will take out of their budget replacing a roof, replacing siding, replacing concrete, because that's not a direct investment into the business to make more money. It's to maintain the business's revenue. But if you want to go invest and rehab an apartment and get $200 more a month in rent, no budget. Do it as much as you can. I don't care if our free cash flow is negative. Because I'm investing back in the business.
Yes.
I'm investing $15,000 to get $200 a month, which increases my asset value by $30,000. You would never, ever stop that. And you don't want to punish a company. The problem is, most companies don't split up their maintenance and growth capital expenditures. They put it all together. That's the problem.
Yeah, folks. I'm focusing 2022 on my year to start options, covered calls and puts, and so hopefully you guys can follow along my journey as Mo and Paul teach me. And a lot of our people in the bid and ask, Mo, they're getting pretty good at this.
People are getting good at options, and it's interesting. There's a lot of people that are starting to factor in options into their trade. So they'll make a trade, and then they'll sell a covered call way out of the money. So they're not going to get executed upon, but they'll put it past a near resistance point or something like that. It's getting really interesting what people are doing. It's pretty cool.
Oh wow, I love these questions, Paul. Even David is just asking very simple. Can anyone trade options? Or do you have to have a company or something? That's funny you'd say that. I mean,
Good question.
No, you can trade options. The only thing is you need to have every contract's 100 shares.
Oh, that's right.
So if you sell puts, you got to have the cash available for 100 shares. If you sell a covered call, you have to have 100 shares. There are the poor man's covered calls, and I'm sure there's the poor man's puts. I just don't deal with those. It's kind of like if you want to Google it and figure it out, great, go ahead. But I do it all the time.
You do have to request access to trade access typically in your brokerage account. So I had to contact Fidelity and basically they had to ask. I had to apply.
You have to fill out an approval form.
I had to be approved to trade options.
Rick's consultant, you were wrong about Big Macs. Building houses are still popular in Scandinavia. Oh, all right, good. I'm glad. I'll probably be wrong about a lot of things. a phenomenal investor is right half the time. I'm okay. I don't know what I was wrong about, but I'm sure. I don't remember that company. Do you remember that company?
No, I don't remember. I don't recognize it.
I'm sure we did it.
We did it maybe one time. Oh wow.
I don't remember. I'm not going to remember what I said after the show.
I don't remember what I'm saying as I'm saying it.
Yeah.
Okay.
In your Roth IRA, that income is not taxable.
No, it's not taxable.
Yeah, I would do it if you can.
Someone's asking, it's a great question. Someone says if I execute options in my Roth IRA and then make gains, is it taxable? As far as I know,
No, I don't think it's taxable.
Yeah, you can go bonkers in it.
Yeah, I do a lot of options.
Great question by Practical Medicine. How far out do you sell the puts? You decide.
question.
I do 1 month at a time. Sorry, no, time out. For covered calls, I do 1 month at a time. For puts, it just all depends on where the company is and the returns. I'm okay doing much further out. Like 2 years ago, I was doing, a year and a half, sorry, when I first started a year and a half ago, I was doing 6, 7, 8, 9, 10 months out. It just all depends on where the company is. I do those by feel, kind of, but I'll probably be doing a month at a time. I just sent Mo and Mikey an email today about my puts and call strategy, and I'm looking at it going, okay, I feel very comfortable that I'll be able to generate some significant income to my portfolio. I'm hoping my goal is 3 to 5% in the day, but I think I can get 6 to 10% if I'm smart about it, and if I'm really on it. That's adding extra income to my portfolio.
We welcome all the new folks in, and I see a bunch of new names. On my screen, I can show you this is everythingmoney.com. This is where you can go to get the data behind Paul. You can sign up here where it says join EM. You get access to the data very soon. You can trade with Mo. You'll see different tiers. This is our website, and we're building it every single day. The developers are working diligently to make this better for you all. So that is where you can join us, everythingmoney.com. Paul, the next stock, I want to say real quick, I want to make sure we say a few things, Paul, which now I totally forgot, but I love you. Adam is asking for, the company is Atkore. Ticker symbol is ATKR, Atkore. I think a lot of people have been asking about this, Paul, and I'd love to get your take on it. Atkore is...
Industrial company. The company manufactures and distributes electrical raceway products. The electrical offers browsing...
Electrical and infrastructure engineered products and services.
Okay.
Let's take a look at it.
$4.3 billion market cap, 23.3 5-year PE, so a little bit high, but look at the 1-year PE, Seth, only 9.7.
That's very nice.
But that could be because of pent-up demand from COVID surge things. 5-year return on invested capital, 13.5%. Wow, that's good.
This is pillar number 2. We want this above 9.
Yeah, no dividend. Now look at this. This is how I know last year was a catch-up year. Look at this, Seth. 5-year free cash flow was 189. Last year's free cash flow was 370. So it shows that there was probably a lot of catch-up happening in the last year. Now let's go see if the year before that was really low. So look at the income statement.
Pillar number 3 is revenue growth over the past 5 years, Paul.
1.5, 1.75, 1.9, 1.79, 2.5.
Big jump.
Yeah, but look at this, Seth. This included COVID right here. Mm-hmm. So they're probably going to do 2 billion, I mean. So maybe it's not that big of a jump overall if you average them together.
Oh, Paul, they manufacture mechanical tube, fence framework, fire sprinkler pipe, metal frame systems, hollow structure systems, sheets, and plates. Interesting. Structural steel sheets. Interesting. Okay, keep going, Paul. Profit growth is pillar number 4.
79 million to 440 million.
Oh, come on.
Yeah, I mean a triple. I don't know about that. I mean, it's tripled in the last year. Shares outstanding.
Pillar number 5. We want this going down, Paul.
It is going down 63.8 down to 46.6.
Is that 5 checks?
The PE is
PE
not
is a little high.
Yeah.
Pillar number
Now,
6.
free cash flow in the last 5 years, 190. 190 times 5 is $950 million. So we want their long-term liabilities to be under $950 million. Oh, it's 902. Check mark there. Free cash flow growth in the last 5 years,
Pillar number
119 to 370. Check mark
please.
there with an average of 190.
Check, please.
190 times 20 is 3.8 billion.
Market cap is 4.3 billion.
It's a little high. And look at this. Look at this
Yeah.
stuff. This is our famous
Valuation.
Oh, it's overpriced.
valuations.
Valuations. Thank
Yeah,
you.
it's just overpriced, it seems. Now, we'll go to the stock analyzer tool and put it in there to see if it really is overvalued. The question is, construction's been big lately.
Yes.
I can't,
Yeah.
look at their revenue. I don't want to take their revenue off of,
So prior to COVID, this was a $30 stock in 2019, and then last year it was a $25 stock.
What is it
Look
now?
at 90 bucks.
91.
oh, wow.
So it's
Yeah, that's crazy.
almost quadrupled here. Now seems like not the time to buy, Paul. Mo, were people trading Atkore over there?
I've never heard of this before. I'm sure they talk about it, but let's see. So what we have going on right now is it has just been consolidating sideways in the middle of the sweet spot, but you can kind of see that it has more of a downtrend than an uptrend right now. And it makes sense. If you look at the stochastic and look what's been happening, it's just going sideways, just doing nothing.
Look how you would have caught that coming into the sweet spot down
Oh
there.
yeah, I mean you had a pretty good run. It was fast though. See, this is the hard thing about long-term trades now. You came through the sweet spot. You could have caught this little bit of a run here, but this is not typical. This used to take back in the day when we had less volatility. It'd take a couple of months to get there, and it would be. This was This is like 11 days. That's pretty crazy, but it makes sense because after that event happened, you saw that the volume just kind of started spilling off, and it is on the decline. So this is just your typical thing that every other stock is doing right now. Volume's falling off, and you got to be patient. Just got to be patient, and it sucks, but you got to do it.
All right, guys, so I put in this, I mean, the revenue jumped up a lot. Is it in the construction business? If so, construction's been very hot lately. I'd be apprehensive. A lot of value investors say, I don't care about trying to time cyclicals. I get it, but I want to avoid companies that are high in the cycle. I just avoid construction right now because I'm like, I just feel like there's going to be a lot better opportunity to buy construction. I put 0% growth and 3% in revenue. Share change, -1 and -2. Profit margin and free cash flow, 8 and 10. 12 and 15, blah, 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 blah. And I have between 44 and 78 bucks. So maybe it's a $55, $60 stock. I don't know. It seems a little expensive. You might think my revenue growth is very, very conservative, but it is. Look at it this way. I always tell people, let's look at Pulte. I will always tell Pulte Group, look at their income statement. Back in 2006 and 7, they hit a high of 15.25 in 2006. How long did it take them to recover that 15.25? They didn't hit 15 billion again. They have not hit 15 billion again yet. That's my point. It's been 15 years and they haven't equated back to their original high of 2006. Was that the biggest crash of history in terms of housing? Absolutely. But if I told you in 2004 even, or 3, it's at 12.2 billion. It did that in 2005. If I told you, hey, it's 2005, we're going to do 12.74, and by the way, in 2021, you'll do 12 billion, that you would have said, you're crazy. It was very high in the cycle. And my job as a value investor is to be conservative. That's the way I approach it. And seen.
That is our take on Atkore. Interesting company, Paul. A little overpriced at the moment. Wow, guys.
So Daniel, I want to address Daniel's question because I think I'm getting a little confused here. When you look at capital expenditures, when you go to this capital expenditures number includes growth and maintenance capital expenses. Free cash flow is the cash from operations less those capital expenditures. You're not deducting growth capital expenditures again from free cash flow. This is after all capital expenditures, growth and maintenance. I really hope that's helping because I think there's a little confusion there. If I'm wrong, Daniel, please let me know.
For all the new folks watching, we're requesting a $50 donation to see a stock.
Not $2.
B, I love you. The reason we do 50 because as you can see in the chat, we're overwhelmed with requests, and all of the super chat money goes to the International Justice Mission, which helps underprivileged folks all over the world get out of terrible situations that they're in. And so, as every week we do on Tuesdays during our live streams, we do a charity and donate. So your super chat money goes to them.
David Los, do you plan on adding more stock exchanges to software? 1,000,000%. Guys, we've only scratched the surface in the software.
Yep.
I'm telling you right now, if you do not belong to the software, you are going to regret it in short time. I roughly mean that.
It used to be $8.
It was $8, now it's $28. It will be $50 or more a month sometime in the future. I spend $16,000 a month on data that will probably go close to $100,000 a month at some point in the next 5 years. $100,000 a month in data expenditure. 1,000,000%, this is going to become your go-to for all financial news and software. If you are not in it or you cancel, I don't know what to tell you besides you don't care about money. How do you sit there and argue about 90 cents a day? I could literally come to you every day and just ask you for $1 and you wouldn't care. But this is going to change your life and you're going to care about it. Just trust me. Sign up now, everythingmoney.com. Please, guys. I've literally never wanted anything more in this world than you to sign up right now.
Wow,
I'm just kidding. There's a lot of things I want more in this world than that. But guys, it's just, I mean, we're scratching the surface on everything this software is going to do and all the content we're going to provide to you. There'll be TV shows. There'll be everything that happens all in the next 20. We're going to be around for so long, it's ridiculous. Yes, we will add charting functions to the software at some point. I'm in it to win it. Thanks, Nick.
Dwayne got in at the $14 level. Yeah, that's great.
I do lay in bed thinking about numbers, mans. Actually, I sleep pretty easily now. But when I'm driving, I think about numbers. When I drive around, I remember when I was getting into real estate, I just drive around, look at property, and I still do that. I still think to myself, I wonder how much that property rents for. I wonder how much to do this for. Oh, that's awesome, Stephen.
Look at you go. I mean, folks, regardless of the data, and let me be very clear, folks, if you're trying to, I have gone out there and tried to join other YouTubers' pages just to see what it's like, and they're always claiming some sort of special inside info. We're not really offering that. We're just offering a concise way to look at data on your phone very quickly and be in our community, and of course guided by Mo to just keep eyes. I just love the fact, Mo, that I can go in the Bidnass Nation and there's a whole chat on just what people are eyeing today. They put little eyeballs on, like, make sure we're looking at this stock today. I love checking in, and you can be as devoted or not devoted as you like in terms of keeping up with the channel. But there is a language you need to learn, and it may take some months to get in. But when you're in, it's great. So again, no secrets, folks. Just plain math and facts.
I want to answer one question. When you buy today at $28 a month, you're locked into that level. Now, there will be increase on that level, but just based on cost. For example, if a year from now it's $40 a month for the new levels, you're still at 28, but we might make you 29 and 40 becomes 41 because we have extra costs. So you will still go up, but you'll be locked in that level. Everybody at that level goes up the same rate, and everybody at the levels below and above go up the same rate. Now, obviously, the $8 people will see the biggest bumps because they paid nothing for it. So when our costs go up by $1 per user, they might see a bigger bump. But the whole point is you are all stuck at that level that you bought, and you never lose it unless you leave. If you cancel, you lose it. So that's what you have to ask yourself.
Thoughts on real estate calculator, Paul? When do you think that's going to be?
I tried setting up the software, and coupon code disruption did not work.
That is hilarious. Who said that? I love you.
Ron, we don't know what we're going to do about that, but we have talked about that. We do channel reviews, Ems.
Yep, we do. Yep, we did Dave Ramsey last week, Paul. Bidnass worth every dollar. Love you guys. Yep, channel reviews, great. Any chance, Paul, you see some beautiful... Mo, you see any...
You can cancel and sign up whenever you want, Scott, but you don't get that. You have to pay the most recent, highest price. So if you sign up now for $28 and in 6 months from now you cancel... And then 6 months later, you're like, oh, I want back in, and it's $40 a month. You got to pay $40 a month. You can't pay $28.
Make sure to let people know they join directly through Everything Money.
If you join through everythingmoney.com,
Is their billing date. They won't get rebilled.
And everythingmoney.com, whatever date you join is your billing date repeated. We don't charge you sales tax. We're not big enough yet. It'll happen at some point in the future when the tax man comes. Patreon charges you, if you sign up today for Patreon, you're charged again in the first of the month and then the first thereafter. And Patreon charges you 10% sales tax. But you can do either way, but Everything Money is cheaper and you don't get double charged. It's your decision.
Wow, there's so many Oh, Dylan, I love you. Thoughts on
Dylan, no idea where Tesla's going to be next year. No clue. And I've never tried to make a guess. Just like I don't know where the stock market's going to be next year. Just like I don't know where anything's going to be next year. But I can say that over the next 10 years and next 12 years, the stock market's going to struggle. The last 10 years have been really good. And if you go look at history at these valuations, the following 10 or 12 years are not good. Could it be different this time? Sure. Is it different this time? Doubt it. But it could be.
When is this Bitcoin ETF going public?
It went today.
No, still hasn't gone yet.
No, it did.
Look, stuck.
What do you mean stuck?
It hasn't been released yet.
I thought they said it has been released. Latinos Invest, I'm holding BABA for a very long time. This is going to be a stock that I hold, hopefully I hold for a very, very long time. I think in 10 years, it's $1,000+ stock. If they keep growing, if they just grow 15 to 20% a year and their margins stay the same.
You know, Tim, we haven't done a blind stock in a while. We should get back to our blinds. People are loving those. I forgot about that. Tesla giveaway in less than 10. That's right, folks. The second Tesla giveaway is happening at 100,000 subscribers. Start picking your color out. If you're in our community, you're automatically entered. We put all the names in a big bucket. We spin a wheel. We pick a name. It's going to happen. And the last guy took the cash payout. But if you want to win a Tesla, jump in and you have a shot. What are you laughing about, Mo, over there?
It's just the way that you said it. It's not how we did it.
What's that? What are you talking about?
Put him in a bucket and
Oh, well, you know, it's a computer bucket, but I mean, it's a spinning computer
Daniel made
bucket.
another comment I want to comment on.
Go ahead.
Daniel, you are right. And that's the thing about doing more research. If you think a company is investing a lot of capital expenditures into growth, having a conversation with the company, their investor relations department, asking them for a breakdown is a very important. Just like our company. I always tell, my father always says, how's cash flow? I go, terrible. Because why is cash flow terrible? Because, Dad, we reinvest every single dollar we make back into the business to grow, and therefore we have no cash flow. My dad's a doctor. In his business, he can't reinvest in his business. So every single dollar of cash flow, where does it go? Into his pocket. But for us, we have 8 or 9 businesses upstairs that can all be 10 times larger than they are today. So why would I keep cash flow? My brother and I pay ourselves a salary that's way more than we need to live a comfortable life. So every other dollar goes right back into investing. So you're right. Unfortunately, that's why I think companies should break down maintenance and growth capital expenditure. That's why we do it internally, because we want to know how much of our expenditures, capital expenditures, are growth versus maintenance. It's a brilliant point, Daniel. I'm glad you brought it up. It is punishing the company. That's why it's your job to go out there and do more research to see how much of that capital expenditure was from growth versus maintenance. Great point, Daniel. I like the Daniel seems to be a thinker here.
Mo, update on when you're getting your new Model S.
I just checked the app today, and it said the November 27th through December 17th.
Nothing's more bipolar than your
What?
You're
your
right.
Tesla.
This thing has gone from December to September to everywhere in between. But
Oh, snap. Wait a minute. I just got to proceed with delivery here.
ooh,
By the way, I don't think I'm going to take my Tesla X.
sell it. Sell the slot.
Should I sell the slot?
Yeah, some sucker will buy it. So talk to one of these hype dorks in here.
No, I don't think it's a sucker. I mean, I think it's just like, listen, when I get it in February, I'll just be like, who wants my spot?
Go on StockTwits after this and go on to the BitO, the new Bitcoin ETF, and just say, hey, I got a spot here for all you that just made a ton of money.
Let's see what this happens. Proceed with delivery on this Model Y. Let's see if I don't know. Well, I'll keep you guys posted. People are asking about my Little Book stocks. If you haven't read the book, The Little Book That Beats the Market by Joel Greenblatt, Paul guided me toward investing in this ETF made of undervalued companies. And last year I invested 150 grand and made almost 100 grand. And then this past June, I invested 250 grand in it. Actually, my wife's 350 grand, and I am currently down about $7,000 with that. And so if you join me on July and you're freaking out, stocks do go down, and I was certainly expecting this. So I will keep you posted certainly on our 6-month and 1-year anniversary of my Little Book buying, Paul. Other questions? Oh, Rudolph just joined the Bid and Ask. Welcome, Rudolph.
Yep, welcome, buddy.
Love you. Book club. Paul, announce what's going on Friday.
Oh, yeah, great idea. So Friday is 10 a.m. now for book club. We're doing chapters. Somebody told me through chapter 12.
I don't know.
Can somebody go watch the video and see what chapters I said? Because I really forget. Tim said we weren't going to chapter 12, but he said
8, 9, 10, but
he said I watched the video and it said 12.
do as many as you want.
So it's gonna be 10 o'clock. I have something at what do I have something tomorrow? What do I have Friday?
So I'm getting
Yep.
delivery October 22nd through November 2nd here. I'm getting that Model Y, so we'll see how that cooks.
I don't get it.
Now, I just saw some. Are they really backing up? Like, I saw someone say they're like postponing production. Am I
Really?
crazy in Tesla? No. Is there is earnings today?
Tomorrow, I think.
Remember, Mo says not to trade on earnings, right? Mo, it's
I don't
too-
like trading on earnings day. It's just because you get those crazy fluctuations that happen and it can burn you. And I mean, if you're in a swing trade, that's going to throw off everything. So it's just not worth it. Now, if you're invested for the long term, who cares about earnings? It is what it is.
Jesprit, is there a Boxing Day discount, Paul? Oh, no. Oh, Patrick. Oh,
I have read the Acquirer's multiple. Yeah, it's a good one. That's where I was talking about when people kept asking about the enterprise value to earnings. The EBIT, that's where, whatever it was, and it's through the enterprise, the Acquirer's multiple.
Patrick asked about my Magic card collection. There's like 2 people in the feed, but Patrick, just for you, I just got a new near mint time twister. If you're in the Discord, just message me up, baby. Let's talk about it. I love Magic. Okay, let's keep going, Paul. Paul, your house in Turks and Caicos. Give us an update on the vacation homes that people can rent.
Renovations starting soon. A lot of furniture has been ordered. About half of it's been ordered. It should be available for rent in May. It's going to be expensive house, $17,000, $18,000 a week. Well, it'll probably be between $12,000 and $20,000 a week, just depending on time of year. The vacation homes in Mexico, luxuryei.com. We have 2 vacation homes in Mexico, 1 in Turks, and we'll be looking next in Costa Rica. So that business, I love that business. It's a high cash flow business. Very little. Right now we have 0 debt. We have an internal debt, and that's it. But we also, it's a great business. I love it. And their houses are awesome.
Mo, I was going to ask you, darn, I just lost it here.
What's up?
You had some predictions about the Lordstown plant. You're talking about this on your morning show, huh?
Yeah.
Tell folks what you think.
So Foxconn is the one that came in and bought the Lordstown plant for, it was like $280 million. Foxconn is the largest iPhone maker out there. And Apple has been talking about an Apple car for a long time. And Apple's not just going to create a startup. They're going to go buy someone and it's going to be Foxconn, and the Apple car is going to be produced here in Lordstown.
You're calling it now.
Yeah, that's going to happen. All of this is adding up so easily in my head.
Mm-hmm. And it's only 45 minutes away from us. We will be your on the scene.
So if that
reporters.
happens, I'm going to go build a house right in front of it, and I can just stare at the factory all day. Just stare.
Somebody did pay for Foot Locker. Do we confirm that was enough?
Oh, I have no clue.
418 NOK. Let me go to Google.
Yeah, we're about 45 minutes away from Lordstown, Man's Woodland.
Yeah,
that sounds about right.
Foot Locker.
Goes there when he gets Starbucks.
All right,
Okay.
Foot Locker.
Thank you. Thank you, Iric. Foot Locker.
First day on the job.
Oh, and Paul, by the way, any prediction on real estate software when it might arrive? The software?
I don't know, but it'll be. We have a long list of things we're trying to do. Real estate analyzer tool will be up, I don't know, somewhere in the next 3 to 6 months. I really don't know.
What, real estate can't go?
Yeah.
I would say, folks, just remember, and this software came out April 15th. It's still so young, and so we're building the channel, building the revenue, and putting it back in for you guys.
Okay.
So patience is a virtue. I love you.
Make it quick.
Let's take a look at Foot Locker, Paul.
So really quick, Foot Locker is an all 8-pillar stock. It's a good brand name. I think everybody knows what Foot Locker is. Mm-hmm. We all went there when we were kids. But it's retail, so make sure you read the 10K, see how they're doing on same-store sales, see how over multiple years, not just last year, because last year will be skewed because of COVID. It'll skew the number up really high. Go look at 15, 16, 17, 18, 19, 20, 21, same-store sales. Go look at how many stores are they closing. Why are they closing stores? Is it because they're underperforming, losing money, or is it not making as much money, et cetera? It's a $5 billion company with $8.7 billion in revenue, net income of $1 billion. Their 5-year PE is 9.4, and their 1-year PE is 4.8.
Oh, wow.
5-year return on invested capital, 11.4%.
We went that over 9. I love it.
And look at their dividend. Only $73 million. Pays you 1.5%. It doesn't eat up more than 12 or 13% of its free cash flow.
Adorable.
Income statement, revenue growth. Look at that. 7.7 to 8.72. Profit, 577 to $1 billion. Shares outstanding, 116 down to 103, and it was 150 just 10 years ago. Wow. Okay, balance sheet. So 636 million in free cash flow times 5 is 3.1 $3.15 billion. It's called $3.2 billion. So we want their total debts to be under $3.2 billion. Total long-term liabilities, 2.56. Check mark there. Cash flow. 425 to 695 with an average of 636. 636 times 20 is $7.7 billion. And they're 4-point-some billion. So it's all check marks. I'm going to do something here. I want to go to their, I'm going to spend a little bit of time on this one. We might go a little over, but I do want to pull up their 10Ks from previous years. So let's go to 10K. Let's go to 2019. Let's see their same store sales.
Make sure you guys are fondling the thumbs up like you tickle Paul's belly, which is much smaller nowadays, Paul. You're looking so fly and thin.
Thank you.
And by the way, folks, we will give you an update in the last 2 months of the year. I will be getting on the scale for my 40-pound weight loss challenge by Paul for $5,000. We're going to have an in-studio during the live stream show when I hit this mark. It should be phenomenal, Paul.
Good boy.
Go ahead.
So look at 16, 17, and 18. This is the same store comparable sales increase, decrease. So they had an increase in 16, decrease in 17, increase in 18. Let's go to 2019. Let's go to 20.
And folks, while Paul's looking it up, I would say we get a lot of questions about, can you guys show us how to look at a 10K? Folks, you just open it up and start reading. It's a lot. Some of them are 40 pages, some of them are 5 pages, but it takes some time. So if you're asking like how to analyze it, you just open it up and start reading. That's what I did. And I'm not even good
By the way,
at all, but
guys, the other thing is,
go ahead, Paul.
comparable store sales.
This is always important for you.
Yeah. Well, obviously they had a big drop that year, but they're still increasing their store sales. Guys, look at this. You ready? If you go to the 10K on there, look at this. How to read a 10K and 10Q from the SEC website. Go read this. It'll teach you a lot. Google it, how to read a 10K. It's very simple. It's just very tedious. That's the problem.
Yes.
So I still like Foot Locker. I think they're just getting hurt because it's what's it called?
COVID?
Retail. Guys, I look at Foot Locker as something that maybe an online store like Amazon could buy for the brand name. The Amazon Foot Locker or something like that. And just do it like that. I mean, because I look at that going, put Amazon storage units in stores, lockers, so you can get things delivered. I mean, I just look at it going, why wouldn't Amazon do something like that? I just think it's a good idea. Plus, they're buying $600 million in free cash flow for $5 billion. Looks like a pretty good use of my money. I don't know. Stock analyzer tool, let's do it real quick. Let's go 7 years. I'm going to go 2 of them. I'm going to do 1% growth and 2% growth. Minus 2%, minus 4% shares. Profit margin, 6.5. Let's go 5.5 and 6.5. Okay, let's go 6 and 8, 6 and 8. 12.5, 12.5. I'm being super conservative here, guys, and it works. I'm being super conservative here, and it works. Do you think my assumptions are reasonable? 1 and 2% revenue growth. I don't know. I look at it going, I think Foot Locker is pretty decent. That makes sense. Supply disruption. Why can't Nike buy Foot Locker? Great question, Wes. Why can't they? They probably can. They might. To me, I look at Foot Locker, though, as better for Amazon. They could put more, like get people to go pick up things at their Foot Locker stores or Amazon store. I mean, it's so funny. Amazon was the anti brick and mortar, and now they're trying to do more brick and mortar. Like there's a Amazon grocery store going in on 18 right next to us. You know that one where the that one being built next to Hobby Lobby?
Is that what that is?
Yeah, they were trying to keep it hidden, but like...
What is it?
It's going to be an Amazon grocery store.
Oh, what's it like? I don't get it.
I have no idea. I've never been to an Amazon
Oh, they're
grocery store.
sick. So you walk in there.
You don't have any... You have to check out. You just like...
You don't have to do anything. You walk in there. It knows that you're in there because of your phone, because you have the app on your phone. Then you walk down the aisle, you pick up this, you put it in your cart. It registers it. You pick up this, you put it in your cart, then you just leave.
No way.
Yeah.
We landed on the moon.
No
All right, guys,
way.
it's 3 o'clock.
Wow, guys. An amazing turnout today. So many new names. If this resonates with you, check out everythingmoney.com. Join the software. You get the data. You can trade with Mo. It'll change your life. Run your numbers on the retirement calculator. See where you sit in this world. If you need to save more, if you need to save less. If you're older, you might have to move to some bonds. If you're younger, put some money in there and see. Our new intern who's switching, Xavier, opened up a Fidelity account last week, and he's going to start funding it because we showed him the damn numbers. If you put a little bit of money in when you're young, you'll have a gajillion dollars.
So really quick, Chris, that's a question. Why does Paul have zero debt on his rental properties? I didn't say that. I have zero debt on my vacation properties because they're foreign and getting debt. I have 2 houses in Mexico. Forget about it. Not going to happen. They're not going to give me debt on that one. But that's why it makes a good return. I make 15, 20% a year because there's no debt. You have to pay cash, decrease the market for it. The one in Turks, I will get debt on once we're done with the rehab. Here, I do have some rental properties with lower debt, and I'm trying to ramp that up. Like we have a property that is worth $20 million, and we have $6 million of debt on it. We need to get a lot more debt on it because when we first financed it, 4 years ago, it was worth 11 or 12 million, 11 million, but since then our rents have skyrocketed and cap rates have gone down, so the values have skyrocketed. So we keep adding more debt as time goes on.
Someone's asking about, can they have access to the formula that is the stock analyzer tool?
It's just an Excel sheet, guys. Nothing special. You just take your years, you increase the revenue as time goes on, profit margin. It's not complicated at all. It's just
It was just an Excel
it's all it is. And all it doing, think about it, is you're taking the revenue increases by the percentage every year. You're taking the multiple for the end value, the multiple of earnings or free cash flow, and the free cash flow margin and profit margin, you're multiplying by the revenue to get that. And at the end, then you do an NPV at whatever your desired return is, and that's the price. Divided by the number of shares. That's it. It's very simple. If you want to rewind that and listen to it, it sounds more complicated than it is. It's not complicated. It's a simple Excel sheet.
All right, guys, that's our take. Thank you for your support. Thanks for watching. See you next live stream, Tuesdays at 2 p.m. Eastern. And for our Everything Money community, Thursdays at 2 p.m., we go live just for you. So we'll see you guys there. Well, Paul will go off screaming, gallivanting around, and cursing the world.
That was very popular.
Thursdays at 2. Join us and fondle the thumbs up on the way out. See you next time. What, Paul? You're laughing. I'm trying to close the damn show.
Funny. It's not complicated, but you create a program. It's because the program just makes it easier for you guys to input everything and not change what the equations are.
Yes.
That's why I made the program. That's a funny comment, though.
See you guys. See you around. Love you. Bye.